Welcome to FXStreet. If you like what we're doing, if you like our videos, if you like watching, please go to our YouTube channel and hit subscribe, join us there. And if you like what I'm talking about, I'm John, your analyst for this video. You can follow me on Twitter at JustAnalysis1. Taking a look here at Solana, which has been definitely a major outperformer amongst its peers and in the market in general. The question now is it going to resume its uptrend? Are we going to continue to see it move higher and higher and higher? That is possible. There's some evidence that we may be facing an area where prices get halted and even travel a little lower. I want to go over that scenario first before we look at the full-on bull mode. The RSI, ever since we reached this top here in September 9th, the RSI struggled to really hold above that 50 level. And as such, I transitioned it into bear market levels. And so in a bear market, the RSI levels are at 55 and 65. We've seen consistent rejection against 65, first on September 18th, again on the 3rd, and then on the days on the outside of that intraday, there were attempts to push it higher. We're now below 65, and we've hit down below 55, and we're testing it as resistance right now. And then you look at the composite index. We've had this very bearish event here where we see it cross down below its fast, and it looks like it's going to push down below its slow average as well. The arrows that are pointing up are pointing to something known as hidden bearish divergence. If you look at the high here, the all-time high made on September 9th, look at the peak on the price chart, and then you look at the peak down here in the composite index, relate that to where the arrow's at, where the next peak occurs on October 3rd. You have lower highs on the price chart, higher highs on the oscillator. That is a warning sign that the upside momentum is likely to discontinue and that we're likely to see a resumption of selling pressure. That is hidden bearish divergence. The chart here, there's a black line across the middle here. That is not the volume point of control, but it is the point of control for the thick volume node that exists up here in the 2021 volume profile. That should act as a pretty good support zone if price comes down, but if it fails, then we're likely to come down to either the blue or the red line here. Those are the Tenkan Sen and the Kijun Sen on the weekly chart within the Ichimoku system. So down to 126 to 117. 117 seems like the more likely zone that we would return to. That would form a double bottom with the prior swing low that we had on the 21st. That is also where the 382 fib retracement is at. On the bullish side of things, if we're going to get into a new expansion phase, then we need to see the top of the cloud hold as support, and then we need to see a resumption of the move higher, because ultimately, within the daily Ichimoku system here, the signal that is going to really trigger that says this is still bullish, we are going to continue in a bull market, we're going to reach new all-time highs. In order for that to occur, this black average over here, which is not an average, it's just a mirror image of the current close. It's known as the Chiku span or the lagging span in the Ichimoku system. It needs to be above the candlesticks, and it needs to close above the candlesticks and then be an open space, meaning if we look forward 5 to 10 candles, is it going to intercept any of them horizontally? So in order for all of those things to occur for a bullish breakout, we need to see Solana close at roughly 180 to 181 even. If it doesn't, if it falls back into the cloud, unfortunately the oscillators here are pointing to continued downside pressure in the near future. Thank you all for watching. Please don't forget to like, comment, and subscribe.